All right, let's just jump right in. If you've paid any attention to the markets lately, you've seen it. I mean, this absolutely insane run-up in AI stocks. It's been a total explosion ever since ChatGPT hit the scene.
And we're not talking about a little bump here. The NASDAQ 100, it's basically doubled since late 2022. Yeah, you heard that right, doubled. The sheer scale of this reaction is just, well, it's pretty staggering to look at. So when you see that kind of meteoric rise, you have to ask the big question, right? And that's really what this whole explainer is about. Is all this hype actually backed by real, honest-to-goodness profits? Or are we just watching some kind of weird financial feedback loop that's, completely disconnected from what's actually happening in the real economy? Okay, to get to the bottom of this, you know the old saying, you've got to follow the money. And when we do, what we find is this really fascinating and maybe even a little bit troubling circular flow of cash that seems to be the engine behind this whole thing. So check this out. It's like a financial merry-go-round. Step 1, OpenAI inks this massive infrastructure deal with Oracle. Great news for Oracle, right? Their stock just takes off. So what does Oracle do? They turn right around and buy a ton of hardware from, you guessed it, NVIDIA. Naturally, NVIDIA's stock goes through the roof. And then, to complete the circle, NVIDIA invests billions right back into OpenAI. They're basically funding the company that kicked the whole thing off in the first place. It's a perfect loop. You see how that works? The money just keeps moving in this tight, self-inflating circle. And, well, this kind of closed loop has led some financial commentators to reach for a pretty heavy label. They're calling it a Ponzi scheme. Now, look, calling it a Ponzi scheme is a big claim. And you can see why, right? It kind of looks like money just chasing its own tail, all built on hype, not actual cash flow. But here's the other side of the coin. If, and this is a big if, this whole setup eventually starts churning out massive real profits, then it's not a scam. It's actually brilliant financial engineering, bootstrapping a whole new economy. But if those profits never show up, then yeah, the whole thing starts to look like it's built on a house of cards. All right, so enough with the market hype and the financial loops. Let's do a reality check. What do the actual numbers say? Where are the profits right now? And this is where things get really interesting and maybe a little alarming. A big study just came out of MIT, and it found that a whopping 95%, 95, of corporate investments into generative AI have produced zero return on investment. Nothing. Zilch. I mean, think about that number for a second. 95%. That just flies in the face of the story we've all been told. Remember the promise? It was huge. AI is going to disrupt every industry. We're going to save trillions in labor costs. That was the dream that was sold to justify these sky-high valuations. So what gives? Well, that same MIT study dug into it, and it found this really important disconnect. At the big corporate level, where it's supposed to be streamlining everything, it's not happening yet. But down at the individual employee level, it's a different story. About 40% of businesses say, yeah, our people are successfully using these tools for stuff like drafting emails or summarizing notes, individual productivity hacks. And this, right here, is the multi-trillion-dollar question. If individual employees are getting a little faster, but it's not actually showing up on the company's bottom line, that 95% zero ROI, then what's the guarantee it ever will? And if there's no guarantee, how on earth can anyone justify the mind-boggling amount of money being spent on infrastructure? Because when we say the spending is massive, we mean massive. And here's the real kicker. This isn't coming from profits they've already made. A huge chunk of this is being paid for with borrowed money. We're talking about debt. Just to put a number on it, get this. Just 4 companies, we're talking Alphabet, Amazon, Microsoft, and Meta, are on track to spend around $300 billion in 2025 alone on AI infrastructure. To put that in perspective, that's like 1.2% of the entire US GDP from just 4 companies in 1 year. Wow. And you can see them piling on the debt to make it happen. Google reportedly added $10 billion in debt just this year. Meta's debt, up $28 billion since 2022. Microsoft's debt jumped by almost $20 billion in just the last year. And Oracle, they're already sitting on nearly $90 billion in debt. It's a huge pile. So this isn't just some small corner of the market. This AI-related borrowing now makes up something like 14% of the entire US corporate debt market. This is real money that has to be paid back with interest.
These companies are literally betting their balance sheets, betting the farm that this AI boom is going to pay off in a big, big way.
So you've got the hype, the insane spending, valuations that seem totally detached from reality. Does any of this sound familiar? I mean, you have to ask, haven't we seen this movie before? The parallels to the dot-com bubble of the late 90s are, well, they're kind of uncanny.
And here's the really spooky part. Back then, people saw it coming. I mean, you had major institutions, even Nobel laureates, waving red flags about a speculative bubble all the way back in 1996. But the market just kept on partying. The peak didn't even hit until March of 2000. That's 3, almost 4 more years of frenzy after the smart money started getting nervous.
It's like they're running the exact same playbook. The narrative, this technology will change everything. The spending, massive cash poured into infrastructure. The valuations, totally disconnected from the fundamentals. And the fuel for the fire, relatively low and stable interest rates. It's almost a carbon copy.
So what was the final straw? What actually popped the dot-com bubble? Interestingly, it wasn't the lack of profits finally catching up with everyone. That was the shaky foundation. The actual spark, the thing that lit the fuse, was external. It was monetary policy. The Federal Reserve started hiking interest rates to cool things down, and that's what finally broke the fever.
And looking back at that history, it really brings all the pieces of our puzzle together today. And it leads us to the multi-trillion-dollar question for the here and now. So let's just quickly recap what we've walked through. We've got a stock market rally that seems to be driven by these self-inflating financial loops. It's all being fueled by a gigantic mountain of corporate debt. And this is all happening while real-world corporate ROI is basically zero for 95% of these projects. Oh, and the whole thing is unfolding on a timeline that looks eerily similar to the dot-com bubble. Which brings us to one last thought I want to leave you with. There's an old saying in the market: markets can remain irrational longer than you can remain solvent. So, given this incredible mountain of debt that's already been piled up, what are the hidden costs? What are the maybe irreversible consequences of betting the entire farm on AI, all while waiting, maybe for years, for that 95% zero ROI to finally turn into a profit? That right there, that feels like the real gamble we're all watching play out in real time.